Welcome to 2021. Guys, we did it. We made it through one of the worst years in our generation. And you know what? It's been a really rough year. A lot of us people have lost a lot of people who have been very close to us. A lot of people have seen struggle. A lot of people have gone through things in their life that have been absolutely tragic. And I hope that 2021, to everyone out there, is a year that we can get back on our feet as a people, as a nation, and as a world, and we can conquer anything that comes our way. Now, unfortunately, I'm not as optimistic about the stock market as everyone. Now, are we in a bubble? The big question on everyone's mind, are we in a bubble? Are we going to see a 10% correction? Are we going to see a 20% correction? Should you be investing still? Should you be putting into these sky-high valuations of all these crazy companies? Well, today at the Financial Forecaster, where we plan on getting rich together, we're going to go over on my opinion if I think there's going to be a correction in 2021. We're going to go over on what I'm doing in my portfolio and a few reasons that I see that the market's pretty overvalued. So with that in mind, like and subscribe down below if you're liking the content. It really helps the channel. It's really giving me a bunch of pride to keep going. And I hope to make 2021, not 2021, that's a long time away. Let's hope to make 2021 the year where I can make this channel great. I can give all the people watching some safety, some understanding, and some freedom in their lives to pursue what they want and have a safety in their soul to keep going. So without any more ado, without any more pause, let's get to the video. Let's cover what I'm doing in case there's a bubble, what I'm doing in case there's a correction, and with the Financial Forecaster, let's get rich together, guys. Let's get into it. So with that in mind, what do? Do we throw in the towel? Do we not invest? Do we sell our positions? Do we just stack cash? Do we just put away cash and get ready for this huge market correction? No. Well, not in my opinion anyway. If the market continues to go up, you should be going up with the market. If the market eventually sells off, you should be putting in and buying on the way down. This strategy has worked for the likes of Peter Lynch, the likes of Warren Buffett, Charlie Munger. You're looking for things that are on sale. I cannot say this enough. I cannot stress this enough. When a company takes a big hit because the stock market goes down, and I'm talking a company that you know is reliable. I'm going to use the word reliable. I'm going to go with one of my favorites. We'll go with TELUS. TELUS is a giant phone company. If there is a huge hit to the GDP of China and the whole stock market gets a little tumbly and TELUS goes down 6 or 7%, it's on sale. Sale. You want to buy companies on sale. You want to buy things that are discounted. Everyone loves walking into a mall and finding something that they want on discount. Well, imagine finding something that you wanted, buying it at a cheaper price that gives you the same amount of return in yield, which is your dividends, every year. So when something is on sale and you can get it at a better yield, you should be watching it, looking at it, and this is definitely when you're looking at your buy range. So when you have a buy range for a company, a buy range is the price of a stock that you're comfortable buying. And if you're not sure what you want to buy something at, watch it for a while. Put it on your brokerage, either your Yahoo Finance watch list or your Robinhood or your Wealthsimple. Add it to your watch list and watch it for a while. Now, I can guarantee you that it's going to start going up and you're going to kick yourself. But with these large, stable companies and the fluctuations in the market over time, there will always be a chance to buy in at a price that you're more comfortable with, or that you'll see that it's been riding a certain number for a little bit, and if this is a company you want to get into, all of a sudden it has a 3 or 4% drop in a day, buy 1 or 2, buy 3 or 4. I've made the mistake in the past where I've used my entire cash flow to buy into a position, only for it the next day to go down another 5 to 6%. This is why you buy in increments, in my opinion. You buy a little here, and then you can watch. If it goes up, great, you've made money. If it goes down, awesome, you can buy it on sale because you're going to be holding this for the next 5, 10, 20 years. First off, we're going to go with the winner. That should be in everyone's portfolio, and if there's not a Canadian banking institution in your portfolio, I would ask you why. Canadian banks are the cornerstone of the financial world when it comes to safe, well-yielding, well-positioned, growing, and stable companies anywhere in the world. A little braggy, but we do have some of the strongest financial institutions in the world. America, as much as I like the American banks, they've gone through some sketchy things in the past, and I'm not 100% that I trust them. I have played Bank of America in the past because, you know, Warren Buffett pushes everyone in a certain direction. But I've kind of diversified away from that. I like the Canadian banks. They're well leveraged. They're well exposed to multiple markets. They have such a strong leadership, a strong position, and a strong backing by the Bank of Canada that I think these are great plays. So TD is the strongest Canadian bank that has exposure to America, and that by itself, when it has so much market potential to grow, is a no-brainer in my portfolio. Now, it is nowhere near the highs that the other companies, the growth companies and the tech companies, it hasn't even reached to its highs before the March change, which we all know about. It's still a little bit discounted in my opinion. Now, I started picking up my position around $65, and now it's all the way up to 71. So in my opinion, I will be adding more to my position. Anywhere under 69, I will be buying a few shares. If you don't have any shares already, buy a couple at 69, and if it goes lower, buy more. Long term, bank stock will appreciate in value, will keep going up. We have population growth keep going up in Canada. Mortgages are solid right now. Hopefully the energy sector will recover, and TD is very well positioned to be paying you out over a 4% dividend every year, and that's fantastic. So anywhere under $69, I would be starting a position in TD. I will be adding more to my TD position, and I love it for that. And especially because, let me just look over to my notes. $1,000 invested. You know, if you have $1,000 and you want to put it into a stock, usually it's a nice easy round number to wrap your hand around. If you put $1,000 into TD today, you'll be making $43.54 a year. For the rest of your life, there's almost a guarantee. I'll never say any dividend is guaranteed, but with TD, $43.54 for $1,000 invested, and over time, this will grow. That's same if you just put the $1,000 in, you let it grow over time. In 10 years, you could be making $60, $70 just off that $1,000, and that doesn't even take into account how much that $1,000 has grown. So TD, absolutely wonderful stock. Love the way it looks, love the way it's been performing, and love the stability of the balance sheet. TD Bank is a definite recommendation from the financial forecaster for my position. Remember, guys, do your own research, do your due diligence. I'm not a financial advisor, but I know that I have a lot of trust and a lot of belief in the Canadian banking institution. Next company on the list, guys, Sun Life Financial. A boring insurance play. I love it. I absolutely love it. It's got great financials. I've read the balance sheet. I've read about the company. I had two choices in whether to go for either Manulife or Sun Life, and what really made up my mind is a big play that they're pushing into the Japanese market. They made a $9 billion investment. That's what I like to see in one of these boring plays, is a direct avenue to more growth. And Sun Life is pushing into Asia. It's pushing all over the world internationally, and it's yielding money. It's safe. It's something that I would buy on any dip because I believe that the yield you're locking in and the future potential for slow and steady growth is great. It fits very well in my portfolio where I'm looking for something that is safe, and I would love it. And I've been buying anywhere under $56. I started my position at 54, but I would be very comfortable starting a position at 56. If you want to buy a few shares here or there at 56, that's definitely what I'm doing. Anything under that, fantastic. You're buying it on sale, is in my opinion, and I love it. Definitely Sun Life. $56 or under is where I would start a position. It's a great company. Now, if you'd had your $1,000, you invest $1,000 in it over the next couple months if you want. That's what I think. I think my position will be around $1,000 or $2,000. For every $1,000 you invest, you get a $39.60 dividend. Fantastic. And again, it's the same with TD. It'll grow over time. The same $1,000 will grow. The dividend yield over the years will grow. Fantastic thing to see in a portfolio. It's a fantastic thing to see in a correction. Usually a big insurance play or a bank play, they won't cut their dividends in economic trouble. They'll continue to pay that yield as you buy those discounted shares. If this thing dropped into the 40s, I would be doubling my position, because you're snatching that yield, you're snatching that future return when the company stabilizes again and continues to grow. It's a mammoth, massive market cap, fantastic company. That's Sun Life Financial. And it's a winner in my portfolio so far. I'm very happy, and it gives me a peace of mind to save and invest in Sun Life Financial. Last on the list, not the most popular play in my portfolio, and that's for sure. And it's something that a lot of people have been asking about, and I've been researching it. Because when people ask me about something I hold, I love to go back and learn why I hold it in my portfolio. And that's a Canadian energy giant, and that's Enbridge. It's not a company that's worried about getting oil out of the ground. It's just a company that's worried about what to do after that with natural gas and with renewables. And that's Enbridge. It's a massive, massive company. It's a company that other companies have a hard time competing against. It's, in my opinion, it's on a weird time in the world where we're moving away from fossil fuels. But Enbridge is a high-yielding dividend company. If you're looking for passive income, there's very few things, very few companies, very few sectors that are going to pay out this massive dividend in a safe. Safe is such a weird word when we're talking about such a high-yielding company. But when we have this company who just increased their dividends last month, that's a pretty good sign to me. They have a large economic float. They have a large balance sheet. They have a good management team. This company's been around for a very long time, and they've been growing, and I really appreciate that about the company. I'm started my position at $40. I have been buying shares anytime it's gotten anywhere near $40. If it buys under $39, I will be buying more aggressively, because, guys, the dividend yield is crazy. And we went over how much you'll make a year in Sun Life. Well, we went over how much a year you'll make in Enbridge, and they both kind of pale in comparison. So if you use that same $100 the same $1,000 that you would have invested in the other ones, with $1,000 invested in Enbridge at today's prices, you'll get $77.76 a year. And Enbridge just increased their dividend again. This is something that in another year they'll probably continue to do. There was only a small dividend increase last time, and that's okay, because obviously we're in a weird time, but they still did it, and that's very, for an investor, that's a very important thing, especially for a passive income investor, someone who's looking for that cash flow back from their investments. So $1,000 at today's prices will give you $77 a year, and that will hopefully grow over time, especially with your $1,000. I'm not looking towards massive growth, but I'm looking at places in the market that haven't recovered with the rest of the trends, and I'm looking for things that are returning capital to me over the years. And Enbridge is 100% one of those companies that I think not only will my money be relatively safe at these levels, if there's a correction, that I think even if there is a correction, I will be able to grab a monster yield that's relatively safe and will return money to me over the years. And that's why I picked Enbridge. If you want to hold it in your portfolio, it's up to you and how you feel about fossil fuels, but it's starting to grow in my portfolio, and I like it. I think it gives a cushion of passive income back to me after we've seen dividend cuts throughout the last year. So guys, these have been some companies that I've been looking at to weather the storm, if in case there is a correction, in case there is a bearish market up ahead. These are some companies that have strong underlying businesses, that have companies that will pay you out over time in yield, and companies that you can not worry about wiping you out if there is a massive market drop. So this has been the Financial Forecaster. I hope you've liked it. This has been more for the people who have been worried about the market or don't know what to do or when to buy a stock. Always watch a stock. Always have a buy price in mind. Never worry about if you've missed the boat. Just consistently over time invest. Ride it on the way up, ride it on the way down. You're always looking for the future. You want the person you are in 10 years to be very happy with you looking back on yourself today. So next week, I'm going to be covering some venture exchange stocks on the TSX Venture that have come out. I've gotten some requests and I'm very excited. I've been looking into them. So keep an eye out for those. Like and subscribe, and hey, hit that bell for notifications if you're excited about some speculative growth stocks, because I know I am. So with that, Financial Forecaster, let's get rich together. I hope everyone has a fantastic 2021, and let's get back on track together, guys. Financial Forecaster, guys, signing out.